Let's get more. We've got Phillip Streible from Blue Line Futures joining us live via Skype in Chicago. And Phillip, I want to start from something that Jim Rogers said overnight, basically talking about having a blow up, saying central bank madness has the stock market hurtling towards another crash. He admits he's not good at timing the market, but suspects we'll have a blow up, at least in the American stock market. What is your take on that?
It sure does feel like it. In the U.S., the U.S. markets, they're focused on this economic recovery, but we're not seeing much of it right here. You look at some of those stocks that you just outlined. Okay, like Netflix hitting another, all-time high. How many people out there beyond the subscriber base they have are continuing to add to Netflix? Netflix faces increasing competition from other service providers out there. People are looking at, YouTube TV, all these other Hulus, everyone else. They're all seeming to come into that game. You look at a stock like Tesla hitting an all-time high. That's another one that, for example, Tesla is larger than all the automotive markets out there combined. If you add them all together, Tesla's worth more. Tesla only sold 367,000 cars in 2019. Toyota sells 10.9 million. Granted, the average Toyota is probably about 25,000 versus Tesla's 100,000. But you start doing the math, the numbers just don't make sense. That's why I think we're setting ourselves up for a big decline. And when it's going to happen is when positive economic data starts to leak out there. You start to see less hopes of Fed stimulus and less backing from the Treasury Department. That's when we start to come back down.
Well, I know you look at commodities quite closely, namely gold and oil. What do you make of gold price moves? Because this is something that's been quite interesting, I think, during the market rally. Whether we've seen risk on or risk off, gold has just continued to push higher.
Yeah, gold's done really well. I mean, it hasn't been able to sustain that rally over $1,800 and continue to hold it. Silver's been a bit more in favor right now. We're starting to see, a big drive into that. So the ratio is starting to come together. People are playing that 20% investment demand on silver, the 80% the industrial demand. You look at copper futures, they've gone through the roof. A lot of people are disappointed in gold miners. They've been lagging. A lot of them have been shut in right now. But I think you need to wait on gold. It really needs to break out to the upside in order for you to, really get that optimism in the market. Otherwise, you think you just continue to play the trading range back and forth. And interest rates are pinned at the low end of the curve. The Fed's not going to let them go negative, but they're not admitting that they're doing any kind of risk control measures in there. So I think gold's in a holding pattern at the moment. Buy the dips, sell the rips.
All right. Well, that is something to keep an eye on. I appreciate your time, Phillip. We'll have to leave it there. Thank you very much.
Thanks for having me.